So what does it take for a global giant like Nike to actually say their financial results are not where we want them to be?
Yeah, you'd think maybe a small dip, right? But we're talking about something pretty significant here.
For one of the world's most, iconic brands,
Absolutely.
today we're taking a deep dive into exactly that. Nike Inc.'s recent financial performance. We're looking specifically at their fiscal 2025 fourth quarter and the full year results. These just came out June 26, 2025.
And our source for this is Nike's own official investor relations report. So it's straight from them, a detailed look under the hood, you could say.
Right, at their financial health, their strategic direction, all of that.
hmm
And our mission today is really to cut through all the numbers, the financial jargon, help you understand the key takeaways.
Yeah, try and make sense of it all.
We'll explore not just what happened financially, but maybe more importantly, why it matters and what Nike's leadership is actually planning to do about it, you know, to turn things around.
There are definitely some plans in motion.
Get ready for some, I think, surprising facts and hopefully a clear picture of what's really going on at this huge player in the athletic world. So let's unpack this.
Let's do it.
Kicking things off with the big picture then. For the full fiscal year 2025, Nike's revenues landed at $46.3 billion. Now that's down 10% on a reported basis.
Right. And what's really striking, I think, is how that trend seemed to accelerate towards the end of the year.
Sure.
If you look at the fourth quarter, revenues were $11.1 billion.
Okay.
That's down an even steeper 12%. And you mentioned reported basis. That's just the raw number. The report also gives this whole currency-neutral figure.
Ah, yeah. Explain that quickly.
Sure, it basically strips out the effect of, fluctuating exchange rates. So you
Right.
can see the underlying business trend better.
Got it. So less noise from currency swings.
Exactly. And on that currency-neutral basis, the full year was down 9%, and the fourth quarter was down 11%. So it really paints a clearer picture of that downward trend intensifying.
Okay, so if the overall revenue is down, where exactly are those declines hitting hardest? Within that Q4 revenue, Nike Direct. That's their own sales channels, right? Like their website, their own stores.
Correct. Direct to consumer.
That pulled in $4.4 billion, but it was down 14%.
A significant drop there.
And then wholesale, so selling to other retailers like Foot Locker or Dick's Sporting Goods,
Yep.
that was $6.4 billion, down 9%.
So, this immediately raises some questions about their sales channels, doesn't it? If their own direct sales are actually suffering more than wholesale, well, that's quite a shift.
Yeah, interesting.
And then there's the gross margin for the fourth quarter. That's basically the profit they make just from selling stuff before all the other expenses.
Right.
It decreased significantly
Yeah.
by 440 basis points, down to 40.3%.
Okay, hold on. Basis points. For listeners, maybe translate that. How big of a drop is 440 basis points in, like, real terms?
Good question. Yeah, it's just financial speak. 100 basis points is 1 percentage point. So 440 basis points is a 4.4 percentage point decrease.
Wow, okay. That's a substantial hit to their profitability then.
It really is. This isn't just a slight dip. It strongly suggests that Nike is likely, resorting to heavier discounting to move product.
Which makes sense if inventory is high.
Exactly. And that directly impacts their core profitability. It kind of signals a struggle, maybe, with balancing supply and demand out there.
And when we look at the very bottom line for Q4, the diluted earnings per share, it was just $0.14. 14 cents.
Yeah.
For a company of Nike's scale, I mean, that feels remarkably low.
It is. It's a pretty stark indicator of the financial pressure they're under.
Yeah.
Now, Elliot Hill, he's the president and CEO of Nike, Inc. He stated these results are, quote, in line with our expectations.
Okay.
But, and this is the critical part, he added, they are not where we want them to be.
Right. That's quite an admission.
It's that honest assessment, I think, that's crucial. It sets the stage for their forward strategy and basically acknowledges the problem head on.
Okay, so these challenging numbers clearly show why Nike is pushing ahead with what they're calling their win now actions and also this new strategic realignment. They're calling it the sport offense.
Yeah, those are the key terms they're using.
So what exactly are these strategies? How do they plan to, turn the tide with these?
Well, if we try and connect this to the bigger picture, the win now actions seem to be essentially the short-term fixes.
Like what?
Like aggressively clearing out excess inventory, probably through those discounts we mentioned, and maybe tightening up their distribution channels, trying to fix the immediate issues.
Okay. And the sport offense.
That seems to be the longer-term play. It aims to reposition the entire business, really, for sustainable future growth,
Yeah.
sharpening your focus.
Right. And the report says this sport offense gets pretty specific. It's going to focus on 4 key pillars.
That's right. Driving distinction within key sports. So maybe really investing heavily in specific categories like running or basketball again, trying to reclaim clear market leadership.
Okay, what else?
Building a complete product portfolio. Creating, and this is key, I think, compelling stories to inspire and connect with consumers.
Ah, the marketing side.
Yes. And finally, elevating and growing their entire marketplace presence.
And Matthew Friend, he's the CFO. He highlighted that this fourth quarter actually reflected the largest financial impact from our Win Now actions.
Right, so taking the hit now, essentially.
And he expects, quote, the headwinds to moderate from here, which sounds optimistic.
It does. It suggests they believe the worst of the financial hit, specifically from these internal changes, these Win Now actions, might be behind them.
Okay, Matthew sounds optimistic about the internal changes maybe being past their peak impact. But what about external headwinds? Are there things out there that could still challenge this recovery even with their internal changes?
Oh, absolutely. That's a really critical distinction. While the report focuses heavily on their internal actions, things like global economic slowdowns, shifting consumer tastes.
Yeah, fast fashion, other trends.
Exactly. And increasing competition, especially from maybe more agile local brands in some key markets like China, those could definitely pose ongoing challenges.
So the Win Now might clear the decks internally.
Right. But the sport offense really needs to deliver compelling products. And like they said, stories in what's still a rapidly changing market to truly succeed long term. It's not just about fixing internal stuff.
Makes sense. Okay, to really understand where Nike's challenges lie, let's zoom in a bit more. How did specific regions and product categories contribute to these overall declines in the fourth quarter?
Good idea. So the core Nike brand itself, which is obviously the lion's share of their business.
Yeah, the vast majority.
Revenues there were $10.8 billion in Q4, but that was down 11%. And notably, it was down across all geographies, not just one problem area.
And digging deeper into that Nike Direct number we mentioned earlier, the one that was down 14% overall, a significant factor there was a 26% decrease in Nike brand digital revenues. Online sales took a big hit.
Wow, 26%? That's huge.
Even while their own Nike-owned physical stores actually saw a slight increase, up 2%.
So that channel mix shift is really crucial then. It seems fewer people are buying directly from Nike online, pushing more sales perhaps towards their physical locations or maybe even back towards those wholesale partners.
Interesting dynamic. And Converse, their subsidiary famous for the Chuck Taylors.
Yeah, the All-Stars.
They also faced pretty significant headwinds. Revenues there were down a steep 26% to $357 million. And again, impacted by declines across all territories.
Yeah, Converse has had a tough time lately, it seems.
Now, we talked about that big gross margin decrease earlier, the 4.4 percentage point drop.
Right, the 440 basis points.
You mentioned it was primarily due to higher discounts, which makes sense with the Win Now inventory clearance.
And that change in channel mix,
Yeah.
where those declining, presumably higher margin digital sales played a role in pulling the average down.
Okay, now let's look at how they spent money during the quarter. Their selling and administrative expense, SG&A, that basically covers operational costs like salaries, rent, things like that.
Correct. General overheads.
That actually increased just 1% to $4.1 billion. But demand creation expense, which is essentially their marketing and advertising spend,
Athlete endorsements, ad campaigns.
that was up a notable 15% to $1.3 billion.
Wow.
Mainly, the report says, due to higher sports marketing and brand marketing costs. So it shows they're really investing heavily in getting the brand message out there, even while revenue is down.
Trying to spend their way back, perhaps. But interestingly, on the flip side, their operating overhead expense, more of the fixed costs, maybe,
Yeah.
that actually decreased 3% to $2.9 billion.
Yeah.
The report says this was primarily due to restructuring charges they took in the prior year being completed.
Ah, so comparison effect.
Partly, yeah.
Yeah.
And also lower wage-related expenses and some other administrative cost controls. So while they're definitely spending more on marketing, they're finding some efficiencies, or at least controlling costs, elsewhere in the SG&A bucket.
Got it. Now, one detail from Q4 that really jumped out at me was the effective tax rate. It leaped to 33.6%. Compared to just 13.1% in the same quarter last year, that's a huge jump. What's going on there?
It is a big jump. The report points to a couple of main reasons. Firstly, decreased benefits from stock-based compensation.
Okay.
And secondly, some one-time items impacting their lower pre-tax income. Essentially, when your profit before tax is much lower, certain deductions or discrete tax items can have a much bigger percentage impact on the final tax rate.
So a smaller profit meant that certain tax effects looked proportionally much larger.
That's a good way to put it. It led to a much higher effective rate for the quarter.
And all of this, the lower revenue, the squeezed margins, the higher tax rate, it all cascaded down to the very bottom line for the quarter. Net income was just $0.2 billion,
Yeah, 200 million.
down a staggering 86% from last year, and diluted earnings per share also down 86% to that $1.14 figure we mentioned.
Those are really significant declines.
What does an 86% drop in net income actually feel like for a company of Nike's stature? I mean, beyond just the number.
Yeah, it's got to be a jolt to the system, right? It means that for every dollar they're bringing in through sales, they're keeping dramatically less as actual profit.
A huge chunk evaporating.
For investors, it's clearly a red flag. It signals a period of, significant challenge and underlines the need for that substantial strategic change they're talking about. It really shows that even a giant like Nike isn't immune to market pressures or potentially internal missteps.
Okay, so that was the tough fourth quarter.
Yeah.
Shifting focus now to the full fiscal year 2025. How did the whole year shake out?
Well, the full year reflects those same pressures, just averaged out a bit more. Total Nike, Inc. revenues were that $46.3 billion figure, which, as we say, was down 10% reported.
Right.
The Nike brand itself was down 9% for the year, hitting $44.7 billion. Wow. And again, the report emphasizes declines across all geographies, reinforcing that widespread challenge, not just a Q4 blip.
And looking at the channels for the full year, Nike Direct.
Nike Direct revenues were down 13% for the full year, driven primarily by that notable 20% decrease in Nike brand digital sales over the entire 12 months.
Wow, 20% down online for the year.
Yeah. Meanwhile, their own Nike-owned physical stores remained flat for the year.
Yeah.
So again, it really reinforces the struggle they seem to be facing specifically in their direct digital sales channels.
And wholesale for the full year?
Wholesale revenues were down 7% for the full year, and Converse saw a 19% decline for the full year, landing at $1.7 billion. So consistent headwinds for their subsidiary brand as well across the year.
What about the gross margin for the full year? Was it as bad as Q4's drop?
Not quite as severe as Q4, but still down significantly. The gross margin for the full fiscal year decreased by 190 basis points. That's 1.9 percentage points, ending up at 42.7%.
And the reasons? Similar to Q4.
Pretty much. Primarily driven by those higher discounts, the changes in channel mix away from digital, and also higher inventory obsolescence reserves. That basically means they had to write down the value of some older inventory they couldn't sell at full price.
Okay.
But, interestingly, the report notes this was partially offset by lower product costs.
So there are finding some efficiencies on the cost of goods side, like manufacturing or materials.
It seems so. Finding some savings in their supply chain, which helped cushion the blow to the gross margin somewhat.
And looking at their full year expenses, SG&A overall.
For the full year, selling and administrative expense actually decreased 3% to $16.1 billion, and operating overhead expense was down 7%.
So some cost control showing up on an annual basis.
Definitely. However, that demand creation, the marketing spend, was up 9% for the full year. Again, showing the continued targeted investment in brand building and marketing efforts throughout the year.
Okay. And the final bottom line for the full fiscal year 2025.
Net income for the full year was $3.2 billion. That's down 34% from the previous fiscal year.
Still a big drop, even if not as dramatic as Q4's 86%.
Correct. And diluted earnings per share followed suit, coming in at $2.16, which was down 42%. So yeah, while the Q4 numbers were particularly rough, the full year also clearly reflects a significant dip in Nike's overall profitability.
Okay, let's shift gears slightly. Beyond the income statement, the revenue and profit, what about the company's financial health, like their balance sheet? How's their cash situation? And what about inventory?
Right, good points. Looking at inventory first, inventories for Nike, Inc. were $7.5 billion at the end of the fiscal year. The report says this was flat compared to the prior year end.
Flat inventory, is that good or bad, given the revenue declines?
Well, it's interesting. It means they didn't pile up more unsold stock during the year, which is positive. They managed to keep it level despite lower sales. But it also means they're still working through a significant amount of product relative to their current sales run rate.
Okay, and cash?
Cash and equivalents and short-term investments stood at $9.2 billion. Now, that was down approximately $2.4 billion from the end of last year.
A $2.4 billion drop in cash. Why such a decrease? Where did the money go?
Well, the report explains that the cash they generated from their operations, while still positive.
So they are still making cash from selling shoes and apparel.
Yes, but that cash inflow was more than offset by a few big outflows, primarily their shareholder return activities.
Ah, dividends and buybacks.
Exactly. Share repurchases, where they buy back their own stock to boost shareholder value, and cash dividends paid out to shareholders. Plus, they also had bond repayments come due and capital expenditures.
What are capital expenditures again?
That's investments in their long-term assets. Things like building new facilities, upgrading technology, maybe new distribution centers, investments for the future.
So even though profits and cash reserves dipped, they're still funneling significant money back to shareholders and investing in the business itself.
That's the picture, yes.
And despite these financial dips, the report highlights that Nike continues its strong track record of increasing returns to shareholders. It mentions 23 consecutive years of increasing dividend payouts.
Absolutely. That's a key point for investors. It shows consistency and commitment. In the fourth quarter alone, they returned about $208 billion to shareholders.
How did that break down?
It included $591 million in dividends, which was actually up 6% from the prior year's Q4 dividend, and $202 million spent on share repurchases in that quarter.
And for the full fiscal year?
The total return to shareholders climbed to approximately $5.3 billion.
Wow.
That breaks down into $2.3 billion in dividends paid out over the year and $3.0 billion used for share repurchases.
So $5.3 billion returned to shareholders in a year where profits fell significantly.
Yes, it clearly shows a continued strong commitment to shareholders even when navigating a challenging environment. It's a balancing act, isn't it? Managing these current financial headwinds while reassuring investors and still reinvesting for the future. That's crucial for them right now.
Definitely a tricky balance. Okay, let's try and pinpoint where some of these challenges lie geographically and by product type. We touched on it briefly, but looking specifically at the fourth quarter again.
Yeah.
How did things break down?
Right, the report gives us some regional and category detail for Q4. Globally, as we said, the Nike brand revenue was down 11%. Breaking that down by product, footwear was down 13%, and apparel was down 10%. Equipment was down just 2%.
So footwear took the biggest hit overall in Q4?
Seems so. And then regionally, the declines were pretty widespread. As mentioned, in North America, their biggest market, total revenue was down 11%.
How did footwear and apparel do there?
In North America, footwear was down 13% and apparel was down 7% in Q4.
Okay, what about Europe, Middle East, and Africa, or EMEA?
EMEA also saw declines. Footwear down 8% there, apparel down 11%, leading to a total regional decrease of 9% for the quarter.
And Greater China. That's often seen as a key growth engine.
Yeah, and it experienced particularly steep drops in Q4. Footwear revenue plummeted 21% in Greater China.
21%? Wow.
Apparel was down 19%, and total revenue for the Greater China region was down 21%.
That's not just a number, is it? That really highlights maybe a vulnerability for Nike in a market where local competitors have been gaining a lot of ground.
Absolutely. It puts immense pressure on that sport offense strategy to somehow regain relevance and traction, specifically in the Chinese market. That's a huge challenge.
And the other regions, Asia, Pacific, and Latin America.
Down 8% in Q4 as well. So it really shows the global nature of these headwinds they faced in the quarter. It wasn't isolated.
And one more detail from the report for the full year. Jordan brand revenues were down 16%.
Yeah, that's another significant data point, given how prominent and, frankly, how cool the Jordan brand is.
Right. It's usually seen as a powerhouse.
It is. And the 16% decline for the full year, that's substantial. It really underscores that the challenges aren't just isolated to the core Nike brand or specific geographies or only apparel. It's impacting across their portfolio, even hitting a star player like Jordan Brand.
Okay, so wrapping things up. You should now have a pretty solid grasp of Nike's fiscal 2025 performance. It's definitely a complex picture, isn't it?
It really is. You've got these clear revenue declines across different channels, across most geographies, significant drops in profit, especially in that fourth quarter.
But then you also have this clear strategic pivot they're signaling with the win now actions and that longer-term sport offense strategy.
Right. Coupled with that ongoing strong commitment to shareholder returns through dividends and buybacks, even amidst the challenges.
It's certainly a challenging period for them, but as you said, the report indicates they clearly recognize the problem and seem to have a decisive shift in strategy underway.
Yeah, the critical question for them now is really all about execution, isn't it? Can they make this sport offense actually work in the marketplace?
Absolutely. Which leads to a final thought for you to maybe ponder. Given Nike's stated goal to lead with sport again and to create stories to inspire and connect with consumers, how do you think these strategic shifts will actually impact their upcoming product lines, their marketing campaigns? What might look different?
Yeah, and maybe tied to that, considering that really significant drop in their digital sales,
Mm,
what kind of innovations might they pursue to try and re-engage consumers in that digital space moving forward? How do they win back online?
Lots to think about there. Definitely something to ponder next time you're looking at a pair of sneakers.